Welcome back, YouTube. My name is Dominic, and as you guys saw from the title of today's video, we're going to be talking about Momentus and their merger with SRAC. The merger has officially gone through, and I'm going to be talking to you guys about everything you need to know about Momentus stock. Okay, so this video is going to have 5 main chapters. The first chapter, I'm going to explain the merger and everything you need to know about it. And then the second chapter, I'm going to talk about their fundamentals, a little bit about their business model and what I like about them. Thirdly, I'll cover their growth strategy, then their financial projections, and then what I think about their valuation multiples and where they stand in comparison to their competitors. Okay, so we all know that before Momentus was under the ticker MNTS, they were under the ticker SRAC, which was the SPAC, Stable Road Acquisition Company. Now they're trading under MNTS. From this merger, Momentus got about $150 million in pro forma cash after the transaction that they could use towards their future launches. Now they did use about $30 million to pay down their existing debt, and then they spent another $40 million to their old CEO, and that's where I get about $150 million remaining. They actually got $230. You subtract the $30 million and then the $40 million, and you get about $150 million remaining, and that's how much they're gonna have to develop their business from going public. It's a decent amount of money, and it's up to us to really see where they take this money and how they invest it. Okay, next slide. All right, fundamentals. This is where it gets a little bit serious here. So Momentus offers 3 main services to generate revenue. Their first one is space transportation. They just send satellites into orbit and into space, and then they make sure that they're functional, right? That's their first service. It's called space transportation. Their second service, which is what stood out to me, is satellite hosting, and they actually call this SaaS. They call it satellite as a service. It's in the name. They basically just offer satellite hosting. They'll host your payload and everything that it takes to host a payload. They're going to offer, and they're going to charge companies a fee to host it. This is good, and this is why I actually highlighted it. It's because it's going to generate recurring revenue. And I love investing into companies that generate recurring revenue because every single month or every single year, they're going to keep on getting the same amount of revenue and more as they gain more subscribers to their service. So I do love recurring revenue, especially from service schemes and service companies. So I love seeing this from Momentus. And finally, they offer in-orbit servicing. If your satellite breaks down and they need to fix something for the satellite, Momentus will do it for you and they'll make a profit from it. So they're kind of like the AAA of space, and I put that in the parentheses so you guys can kind of compare them to something on Earth. Another thing to note about their fundamentals is that they're competing in a really massive growing market. It's going to be worth about $1.5 billion by 2024. And year over year, space travel is becoming cheaper, and that's very important. Because when we look at their financials later, we're going to see that they're not going to be profitable for the first couple of years. But as space travel becomes cheaper and more accessible, Momentus is going to be a free cash flow beast. And finally, they have ride-sharing capabilities, and it's going to allow for a higher profit margins. So essentially, in order for Momentus to send satellites into space, you're going to need a rocket. And Momentus could use their own rockets and build their own rockets to use, but it is much cheaper to ride share, and I put that in parentheses. So what they're going to do is Momentus is going to ride share with other companies already going into space, and they're going to orbit the last mile to take with the satellite where it needs to be. It's very simple, and it's actually smart because they don't have to worry about the expenses of maintaining a rocket or building a rocket, so they're going to have higher profit margins. They're going to be able to actually sell this service at a much cheaper price compared to their competitors as well. So it's an overall net win for Momentus on this category. Now their growth strategy. Momentus claims to be the first mover in the space economy. They say that there's going to be an increased demand for satellite services, and there's also a big thing that they talked about on their investor presentation. They plan for exponential market growth. In fact, I mentioned that the market was about $1.5 billion by 2024. Well, Momentus plans for the market to grow all the way to $35 billion just 2 years later by 2026. So that growth is quite literally exponential. Like, the growth came out of nowhere for the market, and they believe that this growth is going to come because, again, space travel is going to become cheaper, which means it's going to be more accessible for companies to send satellites into space. A cool stat that I did put on the PowerPoint, it says that by 2030, Momentus claims that 10,000 satellites will be in space. And just to put that in perspective for you guys, there were less than 500 satellites in space in 2019. So in about 10 years, you're going to have another 9,500 satellites maybe even more, according to Momentus' stats and their research. So there's a huge growth, as you guys can see, and that's why the actual market growth is expected to be valued much higher over the next couple years. And that's why we also see that there's going to be a lot more satellites in space by 2030. Of course, the more people that want to send satellites into space, there's going to be a higher need for companies like Momentus to orbit them, to host the payloads, and to even service them when they break down. Momentus offers all three, so they're going to be able to generate revenue from all categories. Now let's look a little bit into their financials. Momentus is currently valued at about $1.3 billion. Now they're going to generate very little revenue in 2021, so this valuation is going to be cheap for 2021 and 2022. So as of right now, Momentus MNTS is going to be somewhat expensive. Like I said, they're valued at $1.3 billion, but I think they're going to generate $20 million in revenue just this year, so that's not a lot of money. They're actually losing money. They're not profitable. They're definitely going to have a negative EBITDA for the year, so it's not looking good for 2021. And even for 2022, they're still going to be net negative. Now by 2023, they plan to be EBITDA positive, so about 2 years from now. That's not bad. They're a growing company in a growing markets. That's pretty much like up for grabs for anyone. So it's fine to have, you know, some negative profits or some negative revenue for the first couple of years, because at the end of the day, they're in a new market that they're trying to expand into and become the leaders in. So they're going to be EBITDA positive by 2023, and they're also going to be FCF positive by 2023 as well. Now FCF stands for free cash flow. This is the cash that they're going to have after, you know, the profits, and when you subtract their taxes and you subtract whatever much money they spend on research and development and getting the revenue and the profits, the remaining amount is going to be their free cash flow, and they plan to be free cash flow positive by 2023, which is huge. Only 2 years from now, they're going to be free cash flow positive. And if you guys see their actual investor presentation on their financial projection sheet, by 2025 and 2026, they're going to be free cash flow beasts. And the main reason why is because of this highlighted section right here where I'm hovering my mouse over. They have a very high future projected revenue from SaaS. Now, if you guys remember, SaaS is Satellite as a Service. This is their satellite payload hosting service. And they're going to generate recurring revenue from this, because once you pay for your satellite to be hosted in space, you're going to have to pay each year a recurring cost. So because they're going to get more and more satellites into space each year, they're just going to generate a lot more recurring revenue year over year. So that's why we see a lot more free cash flow in 2023 and further into 2025, 2026, because of that main reason. And at one point, I can actually expect Momentus's SaaS revenue to surpass their transportation service revenue, which is their main driver for the first couple years. So I expect that to happen, you know, maybe 6, 7, 8 years from now. And that's what really makes Momentus versatile, because they're not only making money from sending these satellites into space, but they're also capitalizing on the fact that they're going to need someone to host these satellites as well. So it's recurring revenue, and I personally love it. Now, their valuation. I mentioned earlier they're valued at $1.3 billion. That is their enterprise value. When you take their enterprise value and divide it by their projected sales for 2023, they're trading at a 3.2x EV to sales ratio and a 1.2x EV to sales ratio for 2024. Now, those are both really, really cheap. Ideally, you want a company to be between 1 and 3x. So for 2023, Momentus is going to be just over 3x. They're going to be at 3.2, which is fine because they're a very, very growing company. So that's fine. It's expected. A lot of companies in growing emerging markets tend to have a very, very high EV to sales ratio. So 3.2 is relatively cheap, and it's actually much cheaper when you compare them to their only competitor that's publicly traded, Astra. Astra trading at, I think, about a 6.4 or a 6.1x EV to sales ratio for 2023. So it's almost double Momentus's value, which means that Astra is almost double as expensive for 2023. That's not good. That means Momentus is cheaper, and that's something that you want to keep in mind as well. On top of that, other publicly traded space companies are just as expensive, especially Virgin Galactic. I think they had an EV to sales ratio projected for 2023 of, I think, 62, which is ridiculously high. No company should have that high of an EV to sales ratio. But of course, it's Virgin Galactic, it's flashy, they're sending tourists into space, and people are willing to spend more money on an expensive stock because they believe that it's going to be the innovation, it's going to be the future. I don't personally invest in Virgin Galactic. I'm not invested in it. I just, like I said, I think it's too expensive. But when you compare Momentus to the two other publicly traded space companies, Momentus looks much more promising than both of them. Both Astra and Virgin Galactic, Momentus is much more promising. I have a very, very small position in Momentus. I think it's about 20 shares. I'm not really too bullish on Momentus. I think it's more of a gamble than anything. They've had a lot of speculation and a lot of bad news come out recently from their ex-CEO, which had to step down because he couldn't get a US visa. There's just a lot going on with Momentus behind the scenes that I find weary, but I still love the concept of Momentus and I love their business model, so I'm still invested. I'm just not as bullish as some other stocks on this channel, but I saw that they officially merged Friday and I wanted to cover a video as soon as possible so you guys can get my thoughts on the SPAC transaction between SRAC and MNTS. So if you guys did enjoy today's video, please subscribe down below, like the video as always, turn on post notifications, and let me know down in the comment section, what are your thoughts on Momentus? Are you bullish? Are you bearish? What do you think about the news from their CEO having to step down because he couldn't get a work visa? Let me know down in the comment section below, and I'll talk to all of you guys in the next video. Peace.